It's no secret at this point that the real estate market has taken a complete shift since March of this year. Since that time, the Bank of Canada has raised their interest rates by 3%, causing pricing to go down and mortgage payments to go up. Now, a lot of buyers who are sitting on the fence are doing so because of one main reason. The interest rates are too high, and facilitating a mortgage is going to cost them too much money. This is also something you'll be hearing in the media and what a lot of real estate agents are espousing right now. But is that really true? Is buying now at higher interest rates worse than buying in March with lower interest rates? Let's do a little math. Take a $1.3 million house that would have sold in March of this year. Let's assume that you had 20% down, which would be a $1,040,000 mortgage. At a 1.89% interest rate, that monthly payment would have been $4,348.89. Pretty palatable and manageable at that time. Now, what we aren't taking into account is the market has shifted drastically. In most markets, it's gone down about 22%. So if we take that same $1.3 million house at 22% less, that property would now be $1,014,000, and at 20% down would have an $811,200 mortgage on it, which would be a monthly payment of $4667.32. Granted, that monthly payment is now about $300 more for the exact same house, and that is where buyers are sitting on the fence. But really, we're only looking at today. We're not looking at what is being amortized over the duration of the mortgage. Let's take a look at those numbers a little more deeply. All right, so let's work out the numbers. We're going to start with the $1.3 million house purchased in March. At the time, the interest rates were 1.89%. Assuming a 20% down payment, that would result in a mortgage of $1,040,000 and a monthly mortgage payment of $4,348.89. After 5 years, the balance of that mortgage would be $869,182.27. Now, coming into today's market, where we're seeing a pretty much standard 22% decrease across the board, that same $1.3 million house would now be $1,014,000. What we're going to do is alter the interest rates to today's rates, which is 4.89%, and also assuming a 20% down payment, that would result in a mortgage of $811,200. The monthly payment on that would be $4,667.32. After 5 years, the balance of that mortgage would be $716,724.97, which is over $150,000 less than the scenario at $1.3 million. Now, another important factor is that those mortgages at 1.89% are going to renew. And when they do renew, they're going to renew at the current market rates. So let's assume nothing changes and interest stays at 4.89%. That renewal of $869,182.27 at the 4.89% rate would make that monthly payment balloon to $5,660.11, which is going to cause a lot of issues for people that have purchased in March of 2022 or shortly before then. And let's also keep in mind, your payment would not change. Assuming that interest rates stay the same, you would still be paying that $4667.32 a month, which is about $1,000 less than the other scenario. So as you can see, it's pretty clear. Purchasing right now is actually far better financially for you than it was in March of 2022. While you might be sitting on the fence, you have to really look at the numbers and analyze what makes most sense for you. And I would say by and large, for most buyers right now, purchasing does make sense. Now, what we didn't talk about earlier in the video is the fact that we are assuming interest rates are staying where they are. If interest rates go down, which in all likelihood they will over the next several years, your payments are going to be considerably lower than they are today. But most importantly, the principal amount that you owe is going to be far lower than it would have been if you bought in March of 2022 or at the peak of the market. So if you are sitting on the fence, reconsider, analyze the numbers, and think, is this a good opportunity for me right now? I could tell you based on the numbers, there's a lot of good opportunities out there for buyers, And everybody's case and situation is unique. So we do recommend to book a private consultation with us. We'll walk you through all of the numbers that are specific to your financial situation, the type of property you want, and the location you want to be in. Thanks so much for watching. Hopefully this video helped you out. And as always, we are here to help. Have a great day.